Just before we start this video, I wanted to let you guys know about my free TTTM PDF guide that I'll be sending out to every single person who drops me a DM on Instagram. Let me know that you want the PDF. This PDF document is going to be going through my whole TTTM strategy. It's very detailed, guys. My TTTM strategy is changing lives, producing all kinds of 5- and 6-figure traders. So if you're serious about getting involved, drop me a DM on Instagram. My Instagram is MHU_FX. In this video, I'm going to be going through 4 core parts of my intraday trading strategy. So just as a reminder, the 4 core parts are the POI, the liquidity run, the entry, and the target. So let's go into more detail. On my chart right now, you can see Euro USD. I was bearish on Euro USD. And so if I'm bearish, I always want to see price move higher first and then a drop. When I look at this chart here, this is Friday's price action. I'm going to put on one more line just to separate out the Friday, which is here, and then this is the Monday. So if I'm bearish on this pair, I like to see price run up first before the drop. So let's go in on the POI, which is the very first part of the strategy. We have to look for something that is above the current price that we can use for either a potential entry or just a turnaround. So here, when I look to the left, you have to always remember, look to the left, look to the left. And when I look to the left now, I can see that on this whole push down lower from this high to this low, there is a fair value gap in here. And if you guys don't know what a fair value gap is, it's just where there's uneven trading. And so what I mean by that is this. I mean that here, when there was buying and selling, this just basically means that there's even trading. Here, when you just see a sell candle and a sell candle, more sell candles, but you see no buying and selling in here, it means that there's uneven trading and price would have to come up, provide even trading before dropping. So I'm going to go ahead and mark up this fair value gap. You can see it right here. I'm going to extend it all the way to the right. So right here, we can see this is our fair value gap. I'm going to quickly mark up as a fair value gap so you guys can identify it. So this is our fair value gap. So you can see then on Monday, we open up, we don't tap into the fair value gap, we tap into it here, and then we tap into it one more time. So this is our POI. So price has tapped into our POI. Normally when price is tapping into our POI, there's normally a running of liquidity, and that brings us onto the next step. So the running of liquidity, what liquidity has been taken right here? So the POI is generally a lot higher than this normally, but as you guys can see, there was nothing else here that would draw price. But here you can see this is the Asia session right here, the Asia session. So here you can see we rally above the Asia session. So in other words, what we're doing at this point, we're tapping in those buy stops. And then you guys might be wondering, what is a buy stop? There's going to be people who put their stop losses up here above these highs because they believe it's going to drop. And so when we tap into it, that's a potential area to enter. I generally like to enter from here, but if I'm busy and I miss something, then I miss it. When we tapped above this high here, we actually tapped into those buy stops. So in other words, some people are getting stopped out when price did that. And so that's the second thing that you want to see. You want to see a liquidity run. And after that liquidity run, when price taps into that area, taps into that liquidity, now you have to start thinking about, where can I potentially get an entry from? If you're not in from this high, and there could be multiple reasons why you're not in from that high, maybe you just want to catch the next or the second best entry. Generally, I like to get in from these highs, but sometimes I get in from the second best entry. Once you see a displacement to the downside, something like this, where there's just one candlestick, just like here, when there was displacement right here, then we came back into it. This is the exact same thing you want to do for your entry. You want to see a displacement like you saw here, where you took out multiple lows down here. Then you want to see some kind of retracement for an entry. So I'm going to hit play. You can see we run beneath all these lows now. We're taking this liquidity, but we're waiting on that retracement. We're being patient. We're not looking to jump in now because it means that if we jump in now, we're going to have a larger stop loss. People like to do breakout selling. So if they jumped in from roughly about here, they would have to have a stop loss of about at least 10 pips, at least roughly about 10 pips. And you know, if you can reduce your stop loss, you can get a higher return trade. And with this strategy, it not only identifies the high probability POIs, but it's able to return you back a 1 to 5 on average. And it can even go much further than that. I've used it to catch trades that go much further than this. Let's press play again. You can see we're starting to make our movement back up. Let's keep going. So I'm on a 50-minute time frame. So this is where I enter the trade right here. This is the entry. This is where I entered the trade. I took a short position from here at a stop loss above this high over here, roughly about a 5-pip stop loss. So in other words, what did I do? I put my stop loss well out of the way. I wasn't looking for my stop loss to get tagged. And then, like I said, I told you guys, this provides a beautiful risk to reward. And the thing is as well, When you get to this low, look, it's only a 24 pip move, guys. So here is the trade, guys. You can see it provides a 1 to 5 hour trade, and we're only talking about movements of 20 pips. Just 20 pips, you're able to catch a 1 to 5 hour trade. That is the beauty of all of this. We waited for a perfect POI. Where were my targets then? My targets were the previous day's low, because this is where there's going to be liquidity. There's going to be sell stops down here. There's going to be people who want to do breakout selling. And what would happen is this, guys. So let's go ahead and put that on here. And so this is our previous day's low. This is the Friday's low. So you know there's also going to be liquidity there. So now let's go ahead and hit play. I'm just going to let this one play now. You can see we run straight to our area of interest. This was the target, the previous day's low. This is going to be an area of liquidity. You have to always have a target in mind. You can't jump into these trades and not have a target. You need to have a POI. Then you have to have a liquidity run up into your POI. The third core part, you have to catch a retracement entry and then take it to liquidity, take it to a target, take it to a place where there's going to be a draw on price. This is how I was able to make £2,000 trading Euro USD. So this was a beautiful, beautiful intraday trade. I was only risking about £400 and I made £2,000 from this trade. Okay guys, so I wanted to show you guys one more example. Here is Tuesday. And then we are here on Wednesday. Once again, we're going to go through the 4 key parts. There needs to be a POI, there needs to be a liquidity run into that POI. We also need to talk about the entry and then the target. For Euro USD, I was bullish this day, on Wednesday. My POI, where is that on the chart? So I'm gonna go ahead and mark this up now. Where I want price to run into is this down close candle here. This is our institutional down close candle. When price has this, my POI becomes this down close candle. And then where specifically, I'm looking at 50% and the high. So let's go ahead and mark up both of these. So you can see right here, we have the high of the down close candle, or you can call it a down close play, these sell candles here. And then we also have 50%. I've zoomed in just a little bit so I can show you guys this nice and clearly. The down close candle is my point of interest. And you can get really specific. The high or 50% are normally good places to see sensitivity. So remember this about institutional candles. So we have to have a running of liquidity into that POI. So what do we have here? We have our Asia session. Let's go ahead and mark up our Asia session lows, which is looking like it's down here. So this line here, I'm gonna just change the color real quick. So you can see in the London session, we trade beneath our Asia session lows. This is that liquidity run into the POI. I like to catch it from these 50% sometimes, but like I said before, sometimes you miss the trade. Sometimes you might be busy, or sometimes you're just not trading at that time and you want to catch the second best entry. What do we need to have to make sure that we're going to be confident in buys here? I need to see this high taken out here. Let's go ahead and put on this high. Here is my high. Because if we trade above this high, it means that this is another down close candle. And when I see something like this, it means price is going to be going up to the upside. This is where you be patient. You're not trying to rush and get into the trade so quickly. Just be patient and wait for the next best opportunity. You can see right here, we trade beyond the up close candle. Let's go ahead and make this nice and neat. We trade beyond this high. That this basically means that this now is another down close candle, and at down close candles you want to see price tap into those for mitigation and then go. So let's go to the 1 minute time frame. I'm going to take you guys through my entry now. So you can see the 1 minute time frame, we trade higher above it, and then we come back into it. Once price trades back into the down close candle, this is where I got active. This is where I took a long position and I targeted the previous day's high. So this is our previous day's high up here. Look at this. This is our previous day's high. I'm going to go up the time frame so you can see it a little bit clear. Let's go to the 5 minute time frame. So this here was a 1 to 6.5 hour trade. This strategy will make you profitable because it produces on average roughly about a 1 to 5 hour trade. And with regards to these stop losses, this is my entry. I've gone up to the 50-minute time frame, and now I'm going to go ahead and hit play. We run straight into the area of liquidity. Where was the money? The money was above the previous day's high. And then this is exactly where I took profit. Here is Euro USD. You can see this, my executions are on. You can see right here, this is why I entered. I entered right here when price came back down into the institutional candle. Like I said, you want to see price push off from institutional candles. And then this is where I took TP. I took TP right this high. This was a 1 to 6.5 hour trade, guys. A brilliant trade.